This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. We're on TV, radio, YouTube, Bloomberg Originals. I'm Carol Massar.
Oh, she's back.
I feel refreshed.
You seem refreshed, Carol. We missed you. We are glad you're back. I hope you enjoyed your time away.
I did. And look, I brought with you a new record, at least on an intraday basis here.
That is all you brought me also.
You're
That's
welcome,
okay.
everybody.
Thank you.
You're welcome.
Okay. Hey, a new trading week, new all-time highs on Wall Street. Traders are looking for solace in corporate earnings. A big week in earnings. We're going to be talking about that. And also the trade and the earnings eco backdrop for the rest of the hour.
I felt a little weird not covering earnings last week. Like, I got to kind of catch up still.
We should have done a phone call from you, you know, standing by on the beach.
Tim who?
Yeah.
Sorry,
no.
Not here.
It went right straight to voicemail.
All right. Hey, listen, one of the things we want to get into is Elon Musk's his empire cracking under the strain of his antics. I should say cracking and maybe, well, more like creaking, right? Like there's just these stress points, it feels like. We're going to get on into this Bloomberg Businessweek cover story. It'll be in the new issue that's coming your way shortly. It's also today's Bloomberg Big Take. I love how they did it. It's like we're going to Harvard Business School because it's like case studies.
Max Chafkin going to be by with us in just a few minutes. Also, from dodging B-52s to IT outages and more, we're going to check in on flying the, well, friendly or maybe not so friendly skies of late, because there have been a lot of challenges, Carol.
Yeah, it's been an interesting year for air and air travel. All right, let's get to it, though. Let's get a check on that trading day, those news records on Wall Street, because Charlie Pellet, broad-based rally here.
Indeed, and once again, big warm welcome back, Carol Massar. You were missed. We have got the Dow, the S&P, NASDAQ, all advancing right now. Really, in the absence of relevant economic data, Wall Street remains squarely focused on company outlooks. After the close of trading today, we'll be hearing from NXP. Right now, we have got the Dow, the S&P, NASDAQ, all rallying. Looking at a gain of 0.6% on the S&P 500 index, record there. NASDAQ also at a record. NASDAQ up 0.7%. NASDAQ 100 index up 0.8%. And the Dow right now climbing by 217 points, up 0.5%. 10-year at 4.36%. The 2-year 3.84%. Gold up $44 the ounce. Spot gold now surging by 1.3%, $33.94. And West Texas Intermediate crude oil flat on the day, $67.35 a barrel. A federal judge in Boston is raising questions about the constitutionality of the Trump administration's decision to terminate more than $2 billion in federal research funding for Harvard University. President Trump says he will immediately appeal the Harvard ruling. Again, stocks higher. Also, the Cosby star Malcolm Jamal Warner has died at age 54. That according to multiple media reports, including TMZ and People. He was perhaps best known for his role as Theo Huxtable on The Cosby Show. Cause of death said to be accidental drowning. Malcolm Jamal Warner dead at age 54. Recapping, S&P up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, our thoughts certainly go out to his friends and family. All right, Charlie Pellet, thank you so much. As you just heard from Charlie, though, we do see stocks hitting fresh all-time highs. The S&P topping 6,300 as traders are looking for some signs of resilience in earnings amid tariff risks. There's a lot continuing to come at investors, Tim.
There is, but they certainly are okay with it. We got with us Bloomberg Intelligence Chief Equity Strategist Gina Martin Adams. She joins us here in the Bloomberg Businessweek studio. Earnings season off and running. It's still early. Stocks, though, hitting fresh all-time highs today so far. Could close at those. Does this make sense to you?
I'm not sure how much it has anything to do with earnings and investors sort of just getting on board a very, very powerful uptrend, which is frankly hard to ignore. The FOMO is real, I would say. The other thing to consider is when everybody's questioning the uptrend, it just tends to power it higher. When finally people capitulate and everybody says, okay, it's just going to go higher, then stocks will slap us in the face. It's generally the way that the market works. I've seen an innumerable number of calls for correction coming in July and August, which to me probably means the market keeps going higher. It just, you know, sentiment can be a very, very powerful driver of stocks. And we're in a sentiment-driven market, without a doubt, right now, because earnings are fine, but the market is priced to expect earnings to be much better than anticipated.
Well, talk to us about what going into earnings season, because remind us of expectations were coming down. So if there's a beat, it's on lowered expectations. Give us some perspective.
So the consensus, I think that there's right now a very, very big difference between what's priced in the market and what's priced in the consensus of analyst expectations. And so that's an interesting point in time where the analyst community basically just took their numbers down to rock bottom levels in terms of expectations, with the exception of the tech space. Rock bottom levels for the second quarter. The market obviously has bounced back precipitously since Liberation Day. That in and of itself tells you the market is saying, well, even if it is relatively weak, it's going to be over in a quarter. We're going to see things get a lot better in the second half of the year and next year. So we'll see if that emerges.
Does it factor in, Gina, though, and we've talked about this, the three of us, that we are going to be, though, in a higher tariff rate environment? More so than what we used to.
Well, we think so, but we don't know so. And I think this is the other thing, that the market is defaulting to this notion that either you have a taco situation where you don't actually get the tariffs implemented, or the tariffs are deemed illegal. Right. This did emerge in the last couple of months with the International Trade Commission, or whatever the judiciary body is, suggesting that this is potentially illegal and most of these tariffs aren't going to stick anyway. And I think the market is hanging on to that notion that this is a lot of noise. It's going to continue to create noise and friction, maybe suppresses growth expectations. But ultimately, these are not tariffs that are going to last.
What happens if they're wrong about that?
Well, if they're wrong, then we have to reprice long-term growth expectations. Right now, there is an implied assumption that by 2026, this kind of goes away as a risk. And you see that in the consensus numbers, especially in the U.S. numbers, where U.S. growth rates are expected to hockey stick growth again by the latter half of 2026. Very, very strong growth reemerges, seemingly out of nowhere. That out of nowhere would be trade risk goes away. We finally get to see some accelerating growth, and regulatory sort of policy works in favor of the U.S. market.
That, to me, sounds like an environment where we don't get rate cuts.
Yeah, exactly. There is this sort of, either you think that growth is weak and you get rate cuts, or you think that growth is going to reaccelerate and you don't get rate cuts, but no one can decide which way it is. You can't have your cake and eat it too. And that could be a pretty big risk later this year is, will we actually get these rate cuts? I think right now the market is working on this notion that existed last year, which was, okay, inflation is moderating enough that allows for some normalization of tight rates. Now rates, I think we can argue whether or not they're tight or easy relative to the run rate of economic growth and inflation conditions. Even some easing inflation, if you also get an acceleration in growth, what's the argument for cutting rates? It's very questionable.
Meantime, you've got global central bankers, right? A lot of them cutting rates.
Yes, yeah. So, and that is still a big tailwind for non-domestic stocks. And you do see this emerging, or not emerging, but in the data for this year, where you've got domestic or developed markets outside the U.S. and emerging markets posting double-digit returns. U.S. stocks still sitting at a 7% return year to date. Big, big dichotomy in the return prospects, and some of that is due to the accommodation and policy.
Carol's been wearing her technical hat today because she's a little obsessed.
No, I've been wearing a sun hat and sunscreen.
A little obsessed with this story from Alexandra Semenova.
I am obsessed with this story.
The S&P 500 is sending this signal of yawning momentum under the rally's surface. The idea that the S&P 500 has gone 17 sessions without a move of 1% in either direction. It's the longest stretch of relative tranquility since December.
Yep.
You've been talking about this all day, Carol.
I just think it's interesting.
Yep.
Again, this idea that the S&P, as you said, 17 sessions without a move of 1% in either direction. Are these significant?
Yeah, not necessarily. It could go one of two ways. Either it's losing momentum or it's just consolidating the momentum that is past. It's not, in and of itself, it's not particularly meaningful until it turns in one direction or the other.
Because
you can consolidate gains.
Can it also be a cementing of
It's
levels?
A cementing of the gains. That's what we call a consolidation in technical terms. It's a cementing of the gains, a consolidation of the gains that had occurred in the past. Markets test those topping levels, eventually break out again higher. That's a real possibility as well. There's not a clear signal of downside emerging just yet. There's also not a clear signal of major upside momentum reemerging, but either one is possible after a consolidation phase.
So many options.
Yeah.
Any seasonality at play here?
Yeah,
getting toward August.
It's a good point. We are going into the most volatile component of the calendar.
The August master sell-off coming.
Yeah.
It happens always. I used to be always away, and it would always sell off.
Exactly. That's why you take your vacation in July now.
I took it earlier.
But you are going away in September, so just a heads up.
Yeah.
We could see some.
It's really those 3 months, August, September, and October. Think about the major October surprises we've had in our recent past. So those 3 months do tend to be the period of time when stocks hit volatility peaks. We'll see. There's a lot of speculation that we're going to see trade risks reemerge. But again, I think the market is likely to default to these are illegal anyway. How's this going to get passed? We'll just see.
We're going to talk eco and global economy in just a minute, but 30 seconds left here. You do a lot of traveling, and I know we've talked to you a little bit in the past about the idea of U.S. exceptionalism and maybe people not so interested. Is it coming back?
No.
No.
No, the U.S. investor is telling you that it's coming back. Outside of the U.S., is it coming back? No, it hasn't. The sentiment hasn't changed outside the U.S. The only thing that's changed is they're really worried about the outlook for trade. So where you do have potential upside that emerges if trade policy does not become downside risk is actually still outside the United States as well. Developed markets outside the United States have seen the biggest downward estimate revision as a result of trade. U.S. investors have just said, oh, it's not going to happen. Developed market investors outside the U.S. are very concerned that this is going to happen.
Well, you've set us up really well for our next conversation. So thank you, as always, and for everything else. Gina Martin Adams, she is our Bloomberg Intelligence Chief Equity Strategist. So from the markets to the global economy, Tim, let's go.
And one of the major things that will affect the global economic outlook, that, of course, is something that we just talked to Gina about, trade and tariffs. This as the EU and the U.S. negotiators are heading into another week of intensive talks as they seek to clinch a trade deal by August 1st. That's when President Trump has threatened to hit most EU exports with a 30% tariff. And Carol, as we get telling data on U.S. consumer volumes as well.
Yeah, interesting story. So let's get into it. Bloomberg News Senior Economics Editor Chris Anstey. He is in our Boston bureau. Chris, so good to have you here. We just talked markets with Gina. Sounds like there's lots of scenarios that could come our way. Where are we on U.S. trade talks, and how do you and the Bloomberg economics team continue to track and factor all of this into your economic models?
Yeah, it's difficult. Coming into this interview, I just kind of refreshed myself as to where we are on the state of play with a number of trading partners of the U.S. And I counted at least 4 overseas delegations scheduled to be in town this week. You've got the Europeans, as you mentioned. The Taiwanese said their trade negotiating team is going to be in Washington this week. The Koreans said their negotiator is coming. And just before the election in Japan, the chief trade negotiator, Akazawa, said he was planning to come through. So there's a lot of different teams cycling through. No clarity on how close we are to a deal. We've got the August 1st deadline coming up. Treasury Secretary Bessent said this morning that that should be a little bit of a stimulus to improve the offers that the U.S. side was getting, but really no notion here of what the next week and a half entails.
So let's talk about that as a little bit of a stimulus, because one thing that Gina Martin Adams told us is that essentially the market right now is pricing in the fact that most or all of these tariffs will not actually remain in effect come next year. Is that realistic to you based on your reporting, based on the analysis that you've read and what you found, that these are more of a stimulus to get to a different number via negotiation?
Yeah, it doesn't seem realistic, to be honest. I think you're on the right track there. How the market interprets things, I'm reminded, as you may know, I spent a number of years in Asia, and I'm reminded of something that Mark Mobius, the emerging markets legend used to say about North Korea. North Korea used to come out and do these nuclear tests or, these ICBM tests. And after a number of years, the markets in Seoul, Hong Kong, Tokyo kind of stopped reacting to them. And the way that Mobius said it was, well, at the end of the day, investors just don't know how to price, the risk of an outbreak of nuclear war, so they stopped trying. And it may be something similar here. Going back to the spring, you were talking about volatility in the summer months. April obviously was a very volatile month here with the Liberation Day tariffs and then the pause and so on. It may just be that, much like with North Korea, investors have decided, we don't know how to price in, a fractional chance of 50% tariffs on Europe. So we're going to stop. And we'll just wait to see what the heck happens there. But meantime, we're going to look at other things. We're going to look at how the economy is doing. We're going to look at earnings. We're going to look at mergers and acquisitions,
right.
Whatever the case may be.
On that, Bloomberg's Brendan Murray out with a great story. We talked about it on our planning call this morning about how the number of shipping containers carrying U.S. imports fell for a second straight month, this is according to a private gauge. So this is basically putting that economic indicator on course for one of the sharpest year-on-year reversals on record because of the disruption from President Trump's tariffs. A number like this, perhaps not surprising considering what's going on. Perhaps could it also improve once all the trade chats, as you talked about all the delegations that are in town, once they are done?
Yeah, again, we're already at, according to the Yale Budget Lab, the highest effective U.S. tariff rate right now, not the threatened ones, but the ones in place right now are at the highest since 1910. And I think what you're seeing there in that, decline in container shipping volumes is not just some give back from the pulled forward demand from earlier this year on the part of importers, but the real impact of high tariffs that don't seem to be going down for the duration. And that should continue to erode demand. There was this argument that, companies have fat margins and they can eat the tariffs. Well, there's a Bloomberg economics analysis piece out today showing that the margins on the part of Chinese manufacturers just is not sufficient to absorb the level of tariffs that are in place right now, not the threatened ones, but right now. So it's hard to imagine that there isn't going to be as time goes on, a significant materialization of higher inflation and slower growth, just as the economists predicted at the beginning of the year.
But Chris, just in 30 seconds, why hasn't that happened yet?
Well, it may be that some of the companies indeed have eaten the tariffs for now, but their wherewithal to keep doing that is going to be wearing thin. And consumers, when they see those prices rise, are going to be making different choices in terms of their spending packages going forward.
Yeah, and I feel like that could potentially kind of show up in later earnings this year, right, and outlooks, or maybe even in this earnings season. Who knows? Hey, Chris, so glad we could check in with you. Really appreciate it. Chris Anstey, he is senior economics editor at Bloomberg News. He's out there in our Boston bureau. Great perspective, as he reminded us that, he did spend some time in Asia, so really just pulls it all together for us globally. All right, folks, we are headed for a break. Coming up next, from being first buddy to the president to getting a black eye, today's Bloomberg Big Take on Elon Musk's Trump feud and wild bets. This is so much in this story. I love how they laid it out. Also the Bloomberg Big Take.
First buddy.
First buddy.
Maybe not now.
Times have changed. We're coming back from Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks trading at records. The Dow, the S&P, NASDAQ all advancing. S&P 500 index topping 6,300. Traders looking for signs of resilience in earnings amid tariff risks. After the close of trading today, we'll be hearing from NXP Semi. S&P right now at a record 63.32, up 35. That is a gain of 0.6%. We've got the Dow up 215, up by about 0.5%. NASDAQ up 156 right now, higher by 0.7%. 10-year at 4.36%. The 2-year 3.84%. Gold is surging $45 the ounce to $33.95, up 1.3%. And West Texas Intermediate crude lower a little change now, down 1 cent, 63.33 a barrel. Stellantis shares are lower after reporting a loss in the first half as restructuring expenses, slowing sales, and U.S. tariffs hit the struggling automaker. Stellantis actually higher now. We've got Stellantis up by 1.4% among other automakers. Ford, which reports next week, Ford shares up 2%. And on Wednesday, tomorrow, actually, we'll hear from General Motors. GM shares up now by 0.9%. Recapping, S&P 500 index up by 36. That is a gain of just about 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. Carol Massar, Tim Stenovec, live here on Bloomberg Businessweek Daily. Hey, so many seem to have called it that the bromance wouldn't last between the billionaire and the president. The breakup happening after disruptions to the U.S. government under what some say was the guise of efficiency and data foraging. We are, of course, talking about Elon Musk. He and his black eye, an Oval Office send-off, and subsequent spat with President Trump, the creaking of his empire, and so much more, all in the cover story of the upcoming issue of Bloomberg Businessweek. It is by Bloomberg's Max Chafkin and Ed Ludlow, soon to hit newsstands. It is already, though, Tim, on the Bloomberg and online.
It's also the subject of today's Bloomberg Big Take. With more, great to have back with us Bloomberg Businessweek senior reporter Max Chafkin. He's the co-host of Everybody's Business and the Elon Inc. podcast. He's also the author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. He joins us here in the Bloomberg Businessweek studio. You've spent many years writing about Elon Musk. You give us the backdrop. You remind us of his foray into politics. And then you get into what really matters, certainly to investors, and to what made Elon his empire. How bad is it?
I mean, it is challenging.
He's still the wealthiest guy in the world.
I think he's the wealthiest guy in the world, and investors to date have essentially allowed him to do whatever he wants and to do things that most CEOs, most entrepreneurs would never be able to essentially get away with. That said, there are, I'd say, bigger challenges facing these companies today than he's experienced in a very long time. You know, of course, Elon Musk has a history of sort of flirting with disaster. And you look at the history of Tesla, there were some very dicey moments in the 2000s, same thing with SpaceX. But you haven't had this situation that we have today where you have essentially three companies, SpaceX, Tesla, and XAI. I'm going to leave off the sort of smaller ones, but those are out there too. And then in the foreground, you have this potential fight with Donald Trump. And so, you know, everyone's focused on the fight, but those three companies, each in their own way, have very significant challenges.
So let's get to it, because you do right. There are many more weapons President Trump could deploy against Elon Musk's business interests were he so motivated. So much is like, does he or doesn't he? Let's start. I love the way you guys do this. You do basically like these case studies of each of these three businesses. So let's talk about Tesla. He makes promises. Sometimes it takes longer. We have all gone along from the ride that we eventually get this stuff. And to be fair, when it comes to EVs, certainly in the United States, he moved the needle.
Yeah, absolutely. And that's what's made, I'd say, the events of the last couple of years so surprising, because Elon Musk is attempting this very dramatic pivot away from EVs and towards robotaxis, which is kind of strange because the EV market is still growing very quickly. Tesla, on the other hand, is not growing. I mean, their deliveries have been falling for the last 2 quarters, had a down year in 2024. We'll see what this latest quarter looks like when they report earnings, but they are selling fewer cars each quarter than they did a year ago, and that is kind of surprising for a company that is trading at just this insane multiple, trading at a value that is way, way, way richer than a normal car company. Now, of course, the reason investors are going for this, the reason they're continuing to buy the stock at a relatively high price is because of Robotaxi, this belief that Elon Musk is going to revolutionize transportation. The issue is that's been this kind of thing that Musk was able to point ahead in the future and say, look, this is going to be great. Don't focus on the now, focus on the future. And now we have the now. Now we have some robotaxis on roads, and it's really a very small number. It's something like 10 to 20 robotaxis in a very small part of Austin. Meanwhile, you got Waymo, and we've talked about this before, but there is this obvious competitor, Waymo, which has way, way more robotaxis in more markets and is not getting valued the way that Elon Musk, the way that Tesla is getting valued. So you do wonder, how long is it before investors start to look at that, and how many quarters of sort of declining deliveries, declining car sales are they really going to tolerate?
These companies have sort of always, Elon Musk's companies have always kind of used one another and shared engineers at certain points. Now we're getting to a point, Max, where Elon wants more investment from one company to another company, specifically Tesla, to invest in XAI, which is a challenging thing to do because Tesla's a public company. XAI is not. Shareholders might not love this idea. Explain the sort of borders or lack thereof when it comes to this accounting.
I mean, the thing is, from the point of view of Tesla investors, and I think this is true of most of the investors in most of Elon Musk's companies, they're not investing in a particular product. They're just investing in Elon Musk. And that's one of the reasons why, even when Musk does something that seems on its face a little bit foolish or crazy, for instance, the on again, off again purchase of X at a ridiculous, overvalued at the time, investors go along with because they just think, okay, Elon Musk wants this. He's a brilliant guy. And so you have this thing where the companies, although they are nominally independent, are sharing resources, sharing management, of course, not just Elon Musk, but other folks, sort of bouncing between them or doing work on the side. And now even you have XAI, which is desperately trying to raising money from Elon Musk's other companies. SpaceX, according to Elon Musk, putting $2 billion into XAI, and then Musk has said he's going to ask Tesla for money and a year ago he suggested the number would be $5 billion. So you're talking about significant amount of money. Tesla, of course, has a lot of cash at the moment. So it's not like it can't afford it, but you got to ask yourself, what is the rationale? Like, what's the business rationale if you're a Tesla investor to, move money from Tesla to X, especially when X and Tesla are sort of in competition. They're both AI companies. And so that's an issue. I mean, what I think it shows is that as much as these companies add up to this big empire, they're interlocking. And if one struggles, the others are going to struggle. If Tesla's value were to decline dramatically, that would hurt Elon Musk's empire in a big way because Tesla shares are a big source of his wealth, a way he finances things. And beyond that, there's this aura of success that he has used to sort of promote himself and promote these companies. And as that has, I'd say, come into some question, I think that hurts some of these other companies.
So he did post on X that he's back to working 7 days a week and sleeping in his office if my little kids are away. Yay. But I'm just wondering, which part of his empire is he most interested? You guys talk about XAI, that's what he seems to be super interested in right now. Yeah,
and you get different answers depending on who you talk to within the empire because, of course, Tesla also feels like Tesla employees, board members also feel like they are in the middle of this really unique opportunity with robotaxis. But yeah, I mean, Musk has spent, it seems, at least over the last couple of weeks, a lot of time with XAI and Grok. Now, of course, AI chatbots, that's an area that a lot of investors are excited about. On the other hand, this is a very expensive company to finance. Bloomberg has reported that they're losing $1 billion a month. So like that, $5 billion from Tesla, they're gonna burn through that, pretty quickly. I think from the sort of bull cases, hey, these large language models are really expensive to finance, so we need to, put as much into them now, catch up to OpenAI. But of course, the other side of the coin is like, why does this very successful car company that's worth $1 trillion by market cap, what does it have to do with AI chatbots? I don't think that the answer is a whole lot.
Yeah.
Elon Musk claimed without evidence that President Trump was an accomplice in the crimes of Jeffrey Epstein and alleged that the president had covered them up. This was sort of the nadir in their relationship, I think, if we look back over the last 6 weeks. Is there any recovering from that? Like, do they get back together? Do they become allies again?
I think it is very hard to see. I mean, obviously, those are very serious charges. I mean, sort of like the most serious charges in Republican politics. And it's led to a news cycle, right? That happened, as their feud was kicking off at the beginning of June. Now we're in, mid-late July, and Republicans are still talking about Epstein quite a lot. So yeah, I mean, it's been a bad. That's a thing that's going to really throw a wrench in any kind of potential makeup. Now, I will say, Trump and Musk are both. This is going to sound weird, but they're both kind of forgiving. They both, although they like to cultivate this, both of them, alpha image or whatever. They have, Trump has done this where people have been on the outside and then they find their way in. Steve Bannon, of course, famously was very much on the outs. Now he's no longer on the outs. Musk is the same. Musk, will get very mad at people and find a way to get them back in. So I wouldn't discount it entirely just because, and I've said this on your show before, there are reasons each of them has an interest in being on good terms with the other. That said, I mean, it has seemed very difficult, and you're seeing now. We get into this in the story. There are lots of signs, if you're looking closely, for ways in which this relationship is hurting Elon Musk today. Now, I'm not just talking about Jared Isaacman, the person that Trump originally nominated to head NASA, the space agency, who was close to Elon Musk, who's out now. But there are lots of little regulatory moves, policy moves. And just to give you one example, the guy who's going to run NHTSA, at his confirmation hearing, I believe it was last week, suggested that we need to have more oversight of autonomous vehicles.
If you're Elon Musk, you don't want to hear that when you have a fleet of robotaxis that you're trying to get on the roads.
Yeah, you absolutely don't. Sean Duffy running NASA now, he was, according to at least some reporting from inside the White House, was one of the people who was really upset about Doge. So you're seeing these little things that are potentially troubling if you're Elon Musk, and certainly cut against the sort of bull thesis around the time of the election, which was like, these guys are perfectly aligned. This is going to be amazing. I mean, that's what sent the stock up to its, crazy heights in mid-December. And it's fallen, I think last I looked, around 33% since then, as that argument has sort of fallen apart.
It's, as you guys say, you can't count out Elon ever, but it is curious to see how this ultimately plays out and whether or not he becomes a target of the administration potentially. Hey, Max, thank you so much. Really appreciate it. Bloomberg Businessweek senior reporter Max Chafkin. Max and Ed Ludlow writing this story. It's an upcoming issue of Bloomberg Businessweek. It is the cover story already on the Bloomberg and at Bloomberg.com.
Hey, taking a look at markets, we're seeing the S&P 500 just rally more, up 0.6% now. 63.31 is what the S&P 500 says. NASDAQ Composite up 0.7%. The Dow up 0.5 percentage point.
When we come back, we talk about dodging a B-52 bomber. We talk airlines and the challenges and the outlook of the industry. This is Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at records back to work Monday with the Dow, the S&P, NASDAQ all pushing higher. S&P right now at 63.30, higher by 34 points. That is a gain now of 0.5%. The Dow up 195, up by about 0.4%. The NASDAQ Composite Index up 149 now, up 0.7%. So in the absence of relevant economic data, Wall Street remains squarely focused on company outlooks. The 10-year, 4.35%, the 2-year, 4.84%, and the 30-year, 4.92%. Gold is up $44 the ounce, up 1.3%, $33.94 on the precious metal. A retreat for West Texas Intermediate crude down 0.3%, $67.15 a barrel on WTI. Verizon Communications shares surging 4.8% after the company posted second quarter revenue that surpassed analyst estimates and raised its profit outlook. AT&T, which reports Wednesday, up 1.8%, and rival T-Mobile also on Wednesday, up by 2.5%. Again, Verizon gaining now by 4.8%. The Congressional Budget Office is estimating that the tax and spending law will add $3.4 trillion to U.S. deficits over a decade. Recapping, S&P up 34, up 0.5%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're caught up on the markets. Hey, I don't know if you've looked, Tim Stenovec. I know you have, because I think we've talked about this. Airline stocks are up more than 50% since the early April market low. We've seen quite a bounce.
Yeah. We've heard from a couple of these airlines, too, that there was this turning point at the end of last month and the early part of this month that basically said, we saw this inflection point. At least we heard this from United CEO Scott Kirby last week. Basically an inflection point that basically said, I guess everything's fine again. We're not concerned about trade tension. We're not concerned about the economy.
We're
buying tickets.
Gave two possible scenarios for their outlook.
Exactly.
Which was like kind of unheard of. All right. So, yeah, I think it's safe to say that the rally that we've seen in this bunch of stocks belies the turbulence that we've seen in the overall sector. We also had a great reveal, not so great maybe, this past weekend. Delta Airlines, a jet that was forced to abort landing to avoid a mid-air collision with a B-52 bomber. This was in North Dakota, a go-round maneuver described as aggressive by ABC News, citing the pilot who was guiding that plane, who could be heard in this video that was shot by a passenger on the plane. Check it out.
For those of you on the right-hand side, you probably saw the airplane kind of sort of coming at us. Nobody told us about it, and so we continued. Sorry about the aggressive maneuver. It caught me by surprise. This is not normal at all. I don't know why they didn't give us a heads up, because the Air Force Base does have radar, and nobody said, hey, there's also a B-52 in the pattern. Long story short, it was not fun, but I do apologize for it, and thank you for understanding.
Gotta say, I love the cool of pilots, man. That's the pilot. I know.
I'm more stressed out than he is just listening to that.
It's like, hey. But that's what you want in a pilot.
That's why they have the job.
It is the pilot of the SkyWest operated Delta jet that departed Minneapolis on Friday evening and was approaching an airport in North Dakota. It's located about 11.2 miles of an Air Force base. So let's get into what's going on. Also, Alaska Air had an IT outage. So a lot going on, again, in the overall airline space. With us is Sid Phillip. He is Bloomberg News chief correspondent, global aviation, and he joins us here in studio. Sid, first of all, is flying in the U.S. dangerous?
No, it isn't actually.
Okay.
Flying in the US is still one of the safest forms of transport. So we have seen an increase in media scrutiny, as well as there have been increases in aviation safety incidents. They're not quite accidents yet. I mean, we did have the crash in DC at the start of the year. But in terms of the overall, the aviation industry, there is a massive push at the moment to modernize the ATC in the US. The FAA, like Sean Duffy.
What's the ATC?
Air traffic control.
Got it.
So there is a massive push to sort of upgrade that. Because we had those outages in Newark. We've seen sort of issues with air traffic control staffing. So there are safety issues in terms of just the air traffic control system and how it's managed. In this case, though, it was a military jet. It's a military B-52. So it may not come under the ATC, but there is sort of talk about better coordination. Sean Duffy, the transportation secretary, talked about that when the DC crash happened, because that was a military plane again, helicopter. So we're still looking to see where the overall modernization of the air traffic control system is and where the US goes in terms of being able to actually get those plans that they have at the moment in terms of they want to spend $30 billion on modernizing and where they actually get the funding for that.
Our team reporting earlier today that the Air Force did not make a comment to ABC about this incident. Have we heard anything since then?
We haven't heard anything from the...
Is that a little surprising?
It is, but then we also... the FAA said that they are investigating this incident, and we're sort of waiting to see what they come up with. But typically, the Air Force doesn't comment on situations that are near misses.
Well, I guess this one, to me, is a little different in the sense of it was a B-52. You have the commentary recorded by a passenger of the pilot who sort of explained what's happening in a really cool and collected way. Do you know how in a typical situation like this, a pilot would have been made known about a possible military aircraft within the pattern?
So aircraft typically have collision avoidance systems, and essentially the pilot did something called a go-around, which is fairly common in the aviation industry. I mean, what's not common is having a B-52 coming at you, which is why you have to do a go-around. But there are instances when you either need to recalibrate your approach to the runway, you need to there's an issue at the airport, and go-arounds are frequent and they're a safety measure. But in this case, it does put the entire system under scrutiny in terms of what's really going on with the aviation safety and air traffic control systems in the US.
Well, that's what kind of gets me, is like, how does a Delta jet get so close to a B-52 bomber? Like, I understand that these go-rounds and things happen, but I'm assuming that there is usually great coordination and communication.
There definitely is.
So this was like something didn't happen that was supposed to.
Exactly, and that explains why the pilot was apologizing for that, because it obviously caught him by surprise, caught the air traffic control by surprise. And so we will hear more from the FAA once they do this investigation, and hopefully we'll know what really went wrong there.
This is like your world. What are you thinking? I heard this and I was like,
I was pretty shocked to see this video and hear the commentary from the pilot. It also comes at a time where we're just getting this. None of this. It seems like a steady drumbeat, and I don't know if it's actually happening more frequently. But it kind of started at the beginning of this year with the tragedy at Reagan National, and then we had a lot of reports of near misses. We had some close calls on runways. Is it just that social media is around so we can hear the pilot make this announcement and it's played over and over again in the news media? Or is there actually something different when it comes to numbers here? So
we're still looking at the numbers, but I mean, it hasn't really, it is a lot to do with the increased scrutiny that the aviation industry has faced ever since that DC crash. So near misses are now mainstream news, where they wouldn't have been a couple of years ago, including in instances like last week when we had JFK briefly close one of the runways because of an aircraft that was stranded on the aircraft. I mean, immediately there was interest in what's going on. So there is definitely a lot of interest and anxiety among flying the public, but at the moment, we don't really see a massive increase in the number of incidents.
I'm just worried about communication. I had an incident flying out before my vacation where we took off, pushed off on time, doing great. And then we ended up sitting for 2 hours on the runway. Now, we were told, and again, this is just what an flight attendant said, but that there was actually either the president or part of his administration that were landing in Newark and they weren't planning on it. And it just, to me, sounds, I know things happen, but it just sounds like some miscommunication. Just quickly, I mean, I don't know how to feel this real quickly.
I mean, it is. I mean, obviously there is greater scrutiny. I mean, you wouldn't have thought much of it if it was happening in the past, and if it hadn't happened after all these aviation safety incidents we've read about, we've written about, and we've seen playing out. So I think there is definitely much more that you notice about flying now than you did previously.
So I'm just wondering, was it happening and we just didn't know about it? Or is more happening? Sid, good stuff. Sid Phillip joining us, Chief Correspondent, Global Aviation at Bloomberg News, right here in our studio. When we come back and check on trading and some stocks on the move, do not go anywhere. This is Bloomberg Businessweek Daily.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Businessweek Daily. We do have stocks hitting a record on an intraday basis. We'll see if we close that way. In the meantime, there is a lot going on. I'm Carol Massar along with Tim Stenovec. Let's get to some of the stocks on the move. With us is Bloomberg News equities reporter Alex Semenova here in studio. Got to talk about Verizon.
Yeah, that is a stock that is doing quite well today, up almost 5%. This is after the company posted second quarter revenue that beat analyst estimates. It also raised its profit outlook. Obviously, that is really important this earnings season. The strong results were lifted by wireless price increases and also the Trump administration's new tax law. That was enough to offset the fact that the company actually saw a net loss of 51,000 monthly subscribers. Analysts have been expecting a gain of 12,000. So really remarkable here. I guess that profit outlook optimism is part of the reason that the stock is up today. Its shares are actually up 6% this year as well. Verizon has been struggling to woo new customers in a very tight market, is obviously competing with AT&T and T-Mobile, which up until recently have had better deals than Verizon. Actually, this spring, it put out some promotions. It offered free phone upgrades, so that helped results. That's poised to help results a little bit. The company is also benefiting from U.S. tax reform. This is really interesting. It allows companies to immediately write off the full cost of certain new equipment, and they estimate that that will boost their free cash flow by up to $2 billion. So we're really seeing in some of these earnings reports the real-time benefits of this new tax.
Ticker VZ, stock up 4.7%. Apparently, people jump around from plan to plan, Carol.
We've been doing that a lot. It's kind of driving my family a little crazy. My daughter keeps complaining. Yeah, but some of the jumping, you kind of sometimes get what you pay for. My husband's on this roll, and I feel like there might be another change coming. All right, let's talk about Microsoft. Ticker, of course, MSFT. What's going on here?
Yeah, this one is a bit of a worrisome one. Microsoft warned that hackers are actively targeting customers of their document management software, SharePoint. Obviously, so many businesses use this software. Cybersecurity forums cautioned that a broad section of organizations may be affected through this breach. Tens of thousands, if not hundreds, of businesses and institutions use SharePoint in some fashion to store and collaborate on documents. So very concerning here. Microsoft has been trying to shore up its cybersecurity efforts. They hired people from the government to try and help with this, but clearly that's not enough right now. The stock is a little changed right now.
MSFT is the ticker, and like you said, Alex, the stock a little changed right now. Here's a good ticker, XYZ.
Yeah, Block is set to join the S&P 500 index. Obviously, this is a huge deal for any company. It's also a tremendous milestone for Jack Dorsey's firm, which underscores the influence of the digital payment system and crypto in finance. It is going to replace Hess Corp in the benchmark following Chevron's acquisition of the energy producer. The changes will go into effect prior to the start of trading on July 23rd. You look at shares right now, they're up almost 8%. Inclusion into the S&P 500 typically does bode well for companies. It elevates their profile, and exclusion actually often sees some stock prices go lower.
I don't get the ticker, but I understand what they did is that it was more than just, but it's still a little wackadoo.
They wanted to stand out.
Well, they definitely do, right? And they're definitely standing out today. All right, that is some of the stocks on the move. Bloomberg News equities reporter Alex Semenova. For more conversations like this, be sure to check out our new Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Alex, stick with us because before you go, your story among the most read on the Bloomberg terminal. We wanted to talk about it. The S&P 500 sending a signal of waning momentum under the rally's surface. What's the concern when it comes to there's not a lot of volatility, like this idea that there's been more than 2 weeks of days without 1% moves in either direction?
Yeah, 17 trading sessions without 1% moves. So obviously we are trading on record highs, but when you're not seeing that much of a reaction to the good earnings news that we've had, when we're getting these really muted moves, it's a sign that investors don't have much conviction anymore in the rally. Obviously, we're up something like 27% from the lows of April, and a lot of people are concerned that valuations are a problem again going into the second half of the year, especially when we're still dealing with so much uncertainty around trade policy. There's an expectation that the economy could slow a bit, all these different headwinds that could potentially affect stocks. So really seeing these types of muted moves is a sign that investors aren't all in on this rally, especially when you look at concentration. It's really just big tech in the driver's seat.
There used to be a show called Let's Make a Deal, and I was like, door number 1, door number 2, door number, I think there was 3, and it was like, that's what I feel like, the different scenarios. I will say Gina Martin Adams, who follows the equity markets for our Bloomberg Intelligence team, she said, though, those small moves could also be a sign of consolidation in the market and kind of a cementing of these levels. So, but also conceded that there's a lot of stuff that could come at investors that could make us go in many different directions.
Yeah, absolutely. And one interesting thing too about this earnings season, speaking of big tech and consolidation, is actually big tech is supposed to post profit growth of 14% for this quarter. If you look at the rest of the S&P 500, it's actually expected to post a contraction of 0.1%. So just a testament to the fact that it's just a few names driving this move higher.
I've seen this before.
I know, right? I've seen this movie before. It's like watching episodes of Twilight.
It's worked for all these years. We're always complaining about just big tech driving things, but apparently it's been enough to drive consecutive years.
I watched Twilight on vacation because my nieces were shocked I never watched it. The movie.
Okay.
The series. Alex, thank you so much. I'm just telling you.
Not the Twilight Zone.
No, not the Twilight Zone.
Okay.
Twilight. The close coming your way. This is Bloomberg.